Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Gold bulls attempted to regain the $2,000 level this week, but they found themselves to be in for some back-and-forth market tug-of-war with the bears. Prices rallied above $2,000 an ounce on Tuesday, only to get yanked back down the following trading day. As of this Friday recording, gold comes in at $1,946 an ounce to register a weekly loss of 0.5%. Turning to the white metals, silver is managing a 0.7% advance since last Friday's close to bring spot prices to $26.82 per ounce. Platinum is struggling with a 3.1% weekly decline to trade at $927. And finally, palladium is hanging on to a 3.3% gain this week to come in at $2,254 an ounce as of this Friday morning recording. Earlier this week, precious metals markets got a surprising Buffett bounce. Legendary investor Warren Buffett isn't often associated with gold, at least not in a positive way. In the past, Buffett has made derisive comments about the monetary metal. He once quipped that gold has, quote, no utility. A perpetual optimist on the U.S. economy, Buffett by nature doesn't like the message that is sent by higher gold prices. He has likened investing in gold to, quote, going long on fear. Well, the Oracle of Omaha, as he is known, seems to be reluctantly bracing for a return of fear in the markets. His Berkshire Hathaway holding company recently dumped shares of U.S. banks and went long a major gold producer. News of Buffett's acquisition helped send the mining sector sharply higher on Monday. It also stirred discussions in the financial media about the gold trade.
I want to hit on the hot topic of the moment, which is gold and the gold ETF here. Gold miners are spiking on very heavy volume here after billionaire investor Warren Buffett's Berkshire Hathaway firm revealed he's betting on Barrick Gold. That's very, very interesting.
Warren Buffett, one of the world's richest men, is selling off his investments in banks like Wells Fargo, JP Morgan. And you know what he's doing? He's buying up gold. Why? Begs the question, doesn't it? What does Warren Buffett know that you and I don't know?
Some say Buffett's investing acumen isn't what it once was. His performance has lagged behind the S&P 500 in recent years. But Buffett isn't aiming to outpace the stock market on the upside these days. By raising cash and taking out a stake in a gold miner, he is setting himself up to weather the next bear market in equities. According to the famous Warren Buffett investing maxim, rule number 1 is don't lose money. Rule number 2 is don't forget rule number 1. Buffett has good reason to fear losing money in the stock market at these levels. The current divergence between sky-high U.S. stock valuations and a contracting U.S. GDP raises alarm bells among followers of Buffett. The Buffett indicator, as it's known in Wall Street circles, takes total stock market capitalization and divides it by total GDP. Stocks are currently trading at 1.7 times GDP. That's 70% above the historical average, fully in bubble territory, according to this indicator. So Buffett has good reason to dial down his exposure to the financial sector and obtain some counter-cyclical assets such as gold equities. Of course, mining companies are still vulnerable to economic risks and are more volatile than gold bullion itself. With mining production of gold down 15% year over year, investment buying going gangbusters, and the Federal Reserve vowing to depreciate the U.S. dollar at an accelerated pace, it doesn't take an oracle to grasp why gold traded up to a new record high recently. Buffett may personally own more gold than he lets on publicly. He may also be thinking about acquiring some silver. Back in the late 1990s, Buffett's firm purchased a gigantic physical silver hoard of more than 3,000 tons. Were he to make a similar purchase today, assuming he could even find that much physical silver readily available for delivery, that would certainly move the market. Because most of the silver produced by miners is immediately consumed by industry, available above-ground inventories are scarce. Silver coins and other minted bullion products are even scarcer, as reflected by premiums shooting higher and remaining elevated due to an increase in investment demand. A far scarcer metal, platinum, is currently off the radar for most investors, including even most gold and silver bugs. But contrarians and Warren Buffett-style deep value investors should consider adding some platinum to their hard asset mix. Platinum is more than 20 times rarer than gold. It is so rare that all the platinum ever mined could fit into a room measuring 25 feet by 25 feet. It is also distinguished by being the second most dense metal on Earth, behind its platinum group cousin, osmium. Platinum used to be considered more precious than gold for most of modern history. Up until the past few years, it commanded a higher price. These days, platinum trades at a 50% discount to gold. With global mining production of platinum group metals on the decline, even a small spark of new investment buying could pressure prices massively to the upside. Investors can buy platinum American Eagle coins as well as bars produced by reputable private mints. Money Metals Exchange is also proud to offer Vault Platinum, the most efficient way for individual investors to accumulate physical platinum. The metal, consisting of larger-sized commercial bars, is securely stored with Money Metals Depository without the markup of minted bullion products. For more information on Vault Platinum, Vault Gold, or Vault Silver, visit our website at moneymetals.com or give one of our specialists a call at 1-800-800-1865. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.